Hey there, welcome back to the channel. Today we are going to take a deep look at Starbucks. I want to talk about the positive and negative, and I want to give you my opinion if you should invest in Starbucks. So we have 3 positive things and 7 negative things. So the first positive about Starbucks is their global presence. They have many stores, international, and are still growing international, and this can provide potential growth. They are also the largest branded coffee chain in the world, so they are right now the dominant force international, and this can give them the cost advantage, getting the cheaper uh, resources, and it's an advantage. But of course, the competition is also hard. The second positive thing about Starbucks is that it's very innovative. They have the mobile ordering, the loyalty programs, and different partnerships. So this can definitely increase the revenue in the future, and it's an important part because they also have a lot of gift cards, and this is kind of like a bank system. They have a lot of money from the customer in front, so they can use this money and finance other things. So the third positive thing is Starbucks' strong financial track record. So in the past, they could increase their revenue every year about 10%, 9%, 16%. Like it's a good track record. Of course, in COVID, they uh, lost a lot of revenue, but they could increase it again. So this is a good track record. So the first negative would be competition. The coffee industry is very competitive, and we have many players that try to reaching for higher market share. The biggest competition would be Dunkin' Donuts and Dutch Bros, but also many local coffee shops are the competition for Starbucks. And also we have McDonald's with their own franchise Cosmix that has new products. So this is definitely also the competition in the future. So the second negative would be dependence on consumer spending. So Starbucks is selling very expensive coffees, and in an economic downturn, there are less people who are ready to spend this kind of money on premium drinks. So it's definitely a problem for Starbucks in a bad economy. So the third negative would be the boycotts of Starbucks. We have many people boycotting Starbucks because of the Israel-Palestine conflict, and this is definitely a reason that many people are avoiding Starbucks, and it's also bad for the financial, obviously, because less people will spending money on Starbucks. So it's a big reason, a big negative thing about Starbucks right now. So my fourth negative would be supply chain risk. Starbucks is very depending on the coffee price. So if we have some bad weather in the places where the coffee is produced, this could mean the prices increase dramatically. And the other thing is also the labor cost, because Starbucks has a worker union and they demanding the higher salary. So this is definitely a problem for Starbucks. So the fifth negative is the bad earnings they reported. So if we look North America, they couldn't increase the revenue, and also the operating margin did decline like 1%. This is not good. And also if we look international, it's even worse. The revenue declined over 100 million, and the margin declined even worse. So I definitely think this is in connection with the boycotts. But also in general, the economic is in a downturn, so people less spending on premium coffee. It's probably the reason. And yeah, we just see the margin, the operating margin is declining. This is really not good. And we can see we have more stores. So They increased the stores, about 500 stores more in America, but still they have less revenue. Like, oh, this is really bad. Like, they have so many more stores, but they could not really increase the revenue. This is really bad. If we look, China is similar. We have here store count increased, so they opened more stores, but the revenue decreased. This is really bad. And yeah, we can see that here in general, the store count increased. The licensed stores also increased, but still less revenue, and that's not good. So the sixth negative would be the balance sheet. We have increasing liabilities, we have increasing long-term debt, and the long-term debt is not so less, it's 21 billion. Obviously, if we exclude the capitalized leases, it's 13 billion, so that's less, but it's still not the perfect balance sheet. The other thing I don't like about this balance sheet is the assets. If we look about property and plant, we can see they have 66 million in buildings, and they have 46 million in land and improvements. So this means they owning less buildings, they owning less property. So the most of their buildings are leased. This means they not really investing in the properties. They not own the properties. So that's a business model what I don't really like, because, for example, McDonald's, they owning the most of their buildings, the most of their properties. So Starbucks has to lease these properties, and this is definitely a risk, because if they have the bad economy, they need to pay the leases, but they have less profits, and this is definitely bad for Starbucks. So the seventh negative would be the dividend payout ratio. We can see here how much they pay out of the dividend, and this is 2.4 billion. And we can also see the free cash flow. This is how they pay the dividend. And if we assume that next year the free cash flow would be maybe just $3 billion, then it's will be difficult to pay out their dividend. Obviously they have enough, but it's not great to have such a high payout ratio. And this high payout ratio also means they cannot really buy back stocks. So if the shares drop more and more, they not really have the financial to buy back shares, because they pay this high dividend. And maybe if they have less profits the next years, the dividend could be also in danger, that they will choose to pay out less dividend. So this could also be an option, but I don't really like that, because if the stock is keep dropping and dropping, it means they cannot really do much to stop this drop of the stock price, because they not really have the financial to buy back shares. Yeah.